India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And what a weekend, right? Yeah. I mean, there was so much happening this weekend, from sports to the grand wedding. And of course, the market has been at all-time highs. So, yeah. I mean, it's been great. So
well, and overnight, if you woke up on Sunday morning, the big headline was the shooting of Trump, right? Yeah. And that seems to have swung the US presidential election in his favor, as it was tilted in his favor.
I mean, that it was just quite scary, right? I mean, imagine if it was 1 inch or 2 inches here or there.
Yeah.
I mean, we would have been talking about absolutely different, a very, very different sort of scene this morning. But, well, those are pictures right after the shooting in that rally which took place. Whatever you might think of the guy, that is Donald Trump, ex-president of US, and of course now fighting to be president. I mean, I think that one image of him right after the shooting, getting out and sort of, essentially mouthing the words, fight, fight, fight. I think it's just I think that's the one image which perhaps will be seared in the memory of voters when come November. Of course, I mean, it's advantage Trump in that sense, especially post this. So dramatic visuals, dramatic sort of incident coming through over the weekend. Markets, of course, here are nowhere. I mean, it's because November is too far out and they're not starting to really trade the US elections in that sense. But I think this is going to be important and meaningful later this year. Let's just sort of rewind the clock and tell you what you need to know as we begin another week. This is a holiday-shortened week, of course. Wednesday is a market holiday, but nevertheless, it's filled with lots of earnings. I'll just start with the one sector which really led the rally on Friday, which is IT services. Now, massive move. The index itself ended about 4.5% higher, and that basically propped the Nifty up back to new all-time highs, right? Now, I looked at all the constituents of the Nifty IT index, 10 stocks, and all 10 were higher, and the rally was anything between 3 and 7%. Honestly and frankly, I was scratching my head and wondering, well, what is going on? Because if you look at it, earnings estimates have changed only between 2, 3, 4%. That's it. I mean, there has been no large-scale big earnings revision. You heard the commentary from the TCS management, and that remains largely unchanged. I mean, they've said that FY25 will be better for FY24. They've said that for the last 2 or 3 quarters. And of course, they've also kind of maintained that, clients are focusing on high return on investment projects and kind of pushing back on discretionary projects. I mean, that also remains the same. But markets are markets. I mean, they tend to look at different things differently in different points of time. I think the big rally essentially is on the back of 3 things. One is under ownership in IT stocks. People are, of course, on the hunt for new ideas, which are, the list of those newer ideas is lesser and lesser as everything is done very, very well. IT is one sector which is not. The other one is, of course, is US rates. US rates is also a very big factor. And of course, I mean, there is hope that there will be some sort of earnings turnaround, real business turnaround later this year. And I think that remains a hope, which is fine. But I think at the margin, the bigger underlying driver seems to be, the above 2 at this point in time. Just one other interesting bit, which sort of I found, that stocks of other global IT services companies, not listed here, but listed in the US, EPAM, Globant, Cognizant, they all rallied between 5 and 7%, 5-6% last week, right? I mean, over the last 1 month, they're all up between 10-12%. So this is, what we saw, of course, post the TCS earnings is perhaps also a rub-off on what's happening globally. I'll come straight to US data because, US rates, if there are big influence, we've got to look at the data. Data has been supportive. I mean, jobs number, the CPI number, and you look at the PPI numbers on Friday. That's a core producer price index, and the Michigan inflation expectations both actually were softish. And that supports a sign, and that kind of is the market betting on the fact that Fed cuts are certainly coming. Of course, there is the July FOMC meeting, but I mean, we're looking at the September one where perhaps we'll see the first one. Nasdaq was up 0.6%. The 10-year yield was down 3 basis points. The dollar index was down about 1/3% as well. This is the change on Friday. U.S. markets have done very, very well. And of course, the setup across the board on dollar, etc., is positive here. We will hear, there's an interview which Fed Chair Powell will sit down for later tonight at about 10 o'clock tonight, Monday evening. And I think headlines from there will be watched in terms of especially the imminent July FOMC. Depends on how much he wants to comment. Earnings in the U.S. will also kick off, and there's about 8% of the S&P market cap which will be reporting. Just to circle back and finish this off in terms of levels, Nifty broke above the previous high of 24,461. For a while, we've kind of maintained that, you basically are looking at a higher equality level, which is 25,500. I mean, we'll see if you're on track for that. But you're essentially in blue skies, uncharted territory. Bank Nifty, it gave up the entirety of its intraday gains on Friday, which isn't a good look, which isn't great news in terms of sort of tracking this day on day. On the downside, the Bank Nifty should not break below 51,750. That's the first level. And of course, on the upside, a break above the high of 53,357 will confirm further upsides. And I'll just leave you with this data point on the India inflation. June inflation number, which came out Friday evening, shows essentially the need for a hawkish RBI and why the RBI governor in our interview as well essentially said that, we're not near the comfort zone and perhaps rate cuts, etc. needs to be. I mean, it'll happen, but of course, no timeline as such. Of course, along with that, you also had the IP, the industrial production numbers, which confirms that the economy remains in pretty healthy shape. Give Nifty up on your screen. It'll give you an indication about 84, 85 points higher is what the start is looking like. Sonia.
Oh, absolutely. And, this is a big, big week for the market, right? I mean, you mentioned that it is a truncated week, but there's so many cues to watch out for. So our eyes are going to be on that. Of course, this is the last trading week before the union budget on the 22nd of July. So that is going to be the big focal area for the market. But apart from that, this week we kickstart with a lot of nifty companies reporting their earnings. There's Bajaj Auto that comes out with earnings tomorrow. There's Infosys on the 18th. There is Reliance that wraps it up on the 19th, which is on Friday, and then followed by the union budget on Monday. So it's a big, big week for the market. A lot of stocks in focus this morning as well. There's IRDA, which could really lead from the front after seeing a very strong AUM growth of 34% in Q1. And then you have large caps like HCL Tech as well as Avenue Supermarts that came out with their numbers. HCL Tech maintained its FY25 revenue guidance of 3 to 5%. So no major positive news, but no negative surprise either. And that's something that the street may definitely like. And Avenue Supermarts saw a good improvement in its gross margins, both year on year and quarter on quarter. So these are a couple of heavyweights that will be in focus. But for the markets, right, the sensex and the nifty are now up for the 6th straight week. So we have big gains under our belt. And there was large buying from FIIs on Friday as well. I mean, FIIs bought over 4,000 crores. We're getting additional support from the global markets as well. You have the Dow that hit a fresh all-time high on Friday, above 40,000 on the Dow now. Huge milestones hit over there. The Dow has in fact gained 6% in 2024 so far. But look at the move on the S&P 500, 18% rally in 2024 so far. So big moves coming in there. So all eyes will be on how this week shapes up, and of course large events to watch out for.
Well, that's right. The sense you got on Friday was that in fact, the Nifty is prepared now to move to higher levels, and maybe that range has moved a little bit higher. And now all eyes are on that mark of around 25,000, or the round figure that we're looking at, just a couple of percentage points away. So the bulls, they have their eyes set on that 25,000 odd mark. What do the FIs do? Well, they have been long. They continue to remain long. Close to around 16,000 of their contracts were added on the long side, and there was some mild short covering. It keeps the ratio more or less at that 80%, 20% long short ratio, the LSR ratio that we look at. Well, in terms of the absolute number, well, the FIs, they continue to remain net long, 3.3 lakh contracts on the long side. The clients, well, they have continued their short positioning at around 2.14% of 2.14 lakh contracts. But both of them have come off considerably from the recent high. But the reason I say that it appears this range has moved up because I'm looking at the options data. And remember that 24,450, 24,500, that was a bit of a resistance zone. Now, we did see a fair bit of addition at that particular level because the call writing seems to have moved up from around 24,400 to around 24,500 and 24,700 call out. So both of them were fairly active. On the downside, the put writing, 24,200 put was active. Now in Friday's trading session, we saw that base move up a little bit 24,400, 24,500 put, both of them were fairly active. So the new range you're looking at is, in fact, the markets are likely to move a little bit up. The support, since we are seeing writing at around the 24,400 put, this 24,300, 24,330 mark becomes extremely important. While on the upside, the first level you're looking at is 24,650. And then because the 24,700 call is active, the 24,750 mark becomes important. The Nifty Bank, that's facing resistance at these levels. And I say that because in the last few sessions, we're going towards that 52,700, 52,800 odd. And from there, we're coming off the day's high. So you just pull up that chart, you'll see that the last few sessions, we've been visiting that mark. But the Nifty Bank, that holds the crucial number out here. Even in Friday's trading session, it came off close to 350 points from the high point of the day. So it needs to get past that 52,800 odd mark. The stock that I'm looking at is NBCC. Well, that's been in a bull run of its own. However, on Friday's trading session, it took a bit of a break. It was down close to around 2% odd, and it underperformed the Nifty a little bit. Now, importantly, it's crossed that 20 DMA, and it's trading comfortably about those levels. So was Friday's session a bit of a pause and it wants to resume the uptrend? Or is it in for a bit of a correction? Well, time will tell. But for the time being, that stock is going to be a crucial one because it's seen a big run and it took a bit of a break on Friday.
Okay, Nigel, thanks a lot for that. Well, let's move on and get you some opinion now. On the equities front, we kickstart with Chetan Seth of Nomura, who says that another soft US core CPI almost seals a Fed rate cut in 2024. He says significant rotation seen post-soft CPI release and focus is now on whether the equity rally broadens out into laggards and value areas, at least in the very near term.
Okay, we have Samira and Chakrabarti of Citi who says that higher than expected inflation continued robust growth momentum, relatively easy financial conditions and recent comments from the RBI governor prompt them to push back their first repo rate cut called to April 2025 from October 2024. He says with monetary policy expected to be based on forward-looking data, a shallow rate cut cycle of 50 basis points can happen in early FY26.
Okay, and let's also get you some money market views and tell you how you should approach the rupee this morning. B. Prasanna of ICICI Bank says a soft inflation print and weak jobs data in the US has triggered a broad-based correction in the dollar as an early rate cut in September is getting priced in by the markets. He says the Japanese yen recovered sharply from its lows on account of unwinding of carry trades, while the Chinese yuan and Asian currencies appreciated moderately. However, he says the rupee remained an outlier and hinged around 83.50 because of the lack of trading interest in RBI intervention against flows. He expects this trend to continue and the rupee to trade in a narrow range of 83.30 to 83.60 this week. And on the bonds, V. Prasanna says the bond prices globally saw continued momentum post softer employment data and lower inflation in the US and is now pricing in a 50 basis points cut in 2024. However, he adds local bonds remain cautious amid strong growth and a sticky inflation scenario. He expects consolidation to continue ahead of the union budget on robust demand and thin supply scenario. He expects the 10-year benchmark bond yield to trade in a range of 6.95 to 7.05%.
Well, we've got a lot of stock-specific action that we're tracking for you in our special Top 10 segment. For the time being, we run you through the list. We're looking at HCL Tech, Avenue Supermarts, IRDA, Oro Pharma, Cipla, Lupin, Piramal Pharma, Alembic Pharma, Suntech Realty, and PTC Industries. That's sort of a day where all the stocks will be reacting to positive news flow.